Okay guys, I'm going to give you a case for the bears based in reality and on facts. I'm also going to show you how I was able to combine two charts to potentially give us some bottom targets on a specific date. I'm going to share that with you as well. If you watched yesterday's video, I told you if we dropped a likely point to catch a bounce, we'd be right here at around 36,226. And I knew this because of how strong support and resistance this line was right here. I'll put a link in this video now if you want to check it out. As you can see, we found support on this line and pushed up. Again, I knew this because I know how important this trend line is. This is the same trend line here on the M1 chart I have outlined with this yellow line right here. This is where I called the top up here at 67,000, where I said that was a point to get out. You can see how well this line has been respected, support and resistance, and that is our support currently. This is a published version of the same chart. This is published on August 31st, 2021. This is also, I made a video, I was saying that we would push up, potentially get topped out around 53,000. We would drop on a specific date, and this is where you would buy in around 39,000. But take note, this green line, that is the same line right here. And watch what happens. This green line right here. You can see that we topped out up here. This is the point you should have bought. This is where you should have got out. And you can see currently, that is the green line that is currently our support right here. This chart here, guys, so this is the chart I combined with another chart to potentially give us some our bottom targets on a specific date, which I will show you. But again, this is the chart, these rings I used to predict the top to get out. When we were approaching this point, I said this is the point you want to short and get out. And you can see currently we're testing this ring right now. So if we break this ring right here, the next ring below is right here. And again, you can clearly see how we're respecting these orange rings. Resistance, resistance, resistance. We pushed up to the next one as resistance, pushed up to this one as we got slight rejection. We pushed above it, we got rejected here. So again, flip circles work just like trend lines. If you drop from this ring, your next target is this ring below. And if it gets really bad, your next target is down here. Let's go on. So this is a published version of that chart just to show you. This is published on November 14, 2020. This is that orange ring above just to show you. If I hit play, we hit it twice and got rejected. And there's that orange ring we're testing right now. This right here, guys. So this, I made a video about this as well. I created a fib circle back in 2019 going by price action. Comparing the two fib circles, it told me it was likely this is a point we would start dropping. So I said, get the hell out at 65,000. You can see how this played out. We started dropping. This is the DXY versus Bitcoin. I told you about the inverse correlation between the dollar and Bitcoin. You can see when the dollar came down 15%, Bitcoin pushed up 2,500%. When the DXY pushed up 11%, Bitcoin dropped around 84%. The dollar dropped around 14%. Bitcoin pushed up 1,474%. Currently, the dollar's pushed up 8.66%, and Bitcoin has dropped over 50%. Guys, the US dollar is the world reserve currency. There's a reason you don't see ruble T or ruble T and ruble C or peso T and peso C. It's USDT and USDC. It's pegged to the US dollar. The US dollar is the reserve world currency. So while these other currencies like the ruble are dropping, again, as these drop, the US dollar is going to go up in value. This is a monthly chart of the DXY. While most people say the DXY, the dollar is bearish, I see a falling wedge. We just broke to the upside. Support, resistance, support, resistance, support. We just broke above it, tested it as support, and now we're pushing up. So again, as the shit hits the fan and things get bad for other countries, the last one standing is going to be the US dollar. Cash will be king. I've showed you this, the correlation between the indices and Bitcoin. Above is the Dow, below is Bitcoin. You can see when the Dow dropped 38%, Bitcoin dropped around 63%. When the Dow pushed up 102%, Bitcoin pushed up 1,661%. So you can see the correlation. If the Dow comes down, Bitcoin's coming down. The NASDAQ, S&P, again, if they drop, Bitcoin is coming down. This chart I've been talking about for a while. This is my Dow crash rings chart. I've been talking about when we get to this ring, potentially this is going to be the point where the Dow is going to start dropping a lot. Notice back here, this was in, this is the 2nd of January 2020. Notice we had a cross right here, the moving average is the MACD. This is when we had our COVID crash. You can see we are about to, or having a cross right now. See how overextended we are? Meaning we could have a hell of a drop moving down this ring. Again, very bearish. This is on the monthly. This is that same chart I've been talking about, at this point right here, if I hit play. So it's very possible we could just ride down this ring. Once we break this ring, we got some targets way down below. This is the same chart I used to predict the last crash. This right here ended up being a black swan event, this red ring, and I said this next red ring is potentially going to trigger the next black swan event. Our target potentially is all the way down here. Again, you typically go from ring to ring. This is the chart. This chart right here, you see this red ring right here is actually this white ring right here. This is published on January 7th, 2020, and I said, look, these are your downside targets. Didn't expect us to crash, just have a drop. You see what happened. So that shows how the significance of these rings. At the same time, I also was predicting that Bitcoin was going to crash. Published on February 19, 2020. Every time we cross one of these, we drop past one of these yellow rings, we have a drop. Cross yellow ring, drop. Cross yellow ring, drop. So I expected when we cross this yellow ring, well, this was a lot of resistance, this blue line right here. We were underneath that line as resistance, about to cross this ring. And take note, this line right here was a lot of support. A lot of support, resistance. It became support, so this also nailed the bottom. I had multiple charts that not only told us that we're about to drop, but also told us where our support was. We found support. I think we were off by like a few dollars. It was like 3,000, I think $3,850 where I said to buy in. Let's go on. So guys, supply chain issues. A normal supply chain is unlikely in 2022. You got supply chain issues, guys. You've got inflation that's out of control. The Fed's already started tapering off the free money. They're talking about possibly raising interest rates in March, which is going to be bearish for the markets. You've got fear of possibly Russia and Ukraine going to war. This is also affecting the stock market. The stock market's massively overvalued. We've never seen equity prices quite this high. This adjusted price to earnings ratio is pushing up against 40 times. The last time we saw this was 1999, but if you look at price to sales ratio, that's over 3 times. That's higher than what we saw in the dot-com bubble. So again, stock market's overvalued. Insider CEOs are selling. 2019 they sold 65 billion. 2020 they sold 94 billion. 2021 they sold 170 billion. Elon Musk sold 16 billion. Jeff Bezos 10 billion. Mark Zuckerberg 4.5 billion. They know what's coming. They're getting out. COVID cases, while they're not as high as they were, it was 3.5 million per day. Now it's down to what, 1.5 million. That's still pretty high, guys. There's a lot of stuff going on. So in summary, all right, so let's look. I have this zoomed in, the MACD down here. This red line right here represents when we had a cross on the MACD moving average. When that happened, we had a drop. This is back in 2014. We dropped a total of 75%. Let me zoom out, and you can see right here, we had a cross back here in June 2018. And look what happened. We had a drop of around 62%. Let me zoom out. We just had a cross. Again, this is on the monthly. We had a cross right here. You don't think it's possible we're coming down to test at least your first target, the 200 weekly, 43%. The 300 weekly, 57%. Possibly the 400 weekly, around 70%. That's a hell of a drop. And take note right here. Look. This is the volume. Typically what happens when volume declines, typically you can get a spike in volume. Well, look what happened. We had a drop. So with all the stuff going on in the world, do you think we're going to get a spike to the upside? If you look at the bigger picture, if you go, look, the volume's been declining ever since. I mean, this is back in 2000. This is 2013. The volume's been declining ever since. Again, with everything that's going on, if we get a spike in volume, you think it's going to push to the upside? I don't think so. I think we're going to get one hell of a drop. Again, volume has been declining ever since 2013. So again, it looks bearish as shit to me. So this is the chart I used to combine this. Again, if you watch previous videos, I told you it was either going to be this line that was previous resistance going to flip as support, or potentially this line that is our resistance will flip as support. So I took the that orange flip circle I mentioned at the beginning of this video. So as soon as we break, when we break this point, the next orange ring below is down here. So I think the first target, again, this yellow line right here, the 200 weekly moving average. So I think potentially by the 19th of March, remember the Fed is going to be possibly raising interest rates in March. So we could be testing around 20,000 on the 19th of March 2022. And it's very possible around the 30th of May, we could be down around 14,000. Now again, like I said, we could bottom on this line or this line, but these seem like likely targets to pay attention to. Guys, I made a tweet. I was talking about the C1 and the C1 BG chart. I said we were at resistance at 37,575, at 37,538. And I also mentioned this chart as well. We got a perfect rejection on the H1 chart. Guys, these charts are accurate. The next candle open was below this white line. Let me give you some price targets currently. You can see we're trying to get above right here on the C1 chart at 37,568. If we do, the next point to short is potentially 38,500 up to 38,600. If we drop, your next support is right here, 35,932. This is the H1 chart. If we push up, again, your resistance is right up here around 39,400. And if we drop, your next support level to watch is around 34,647. Guys, if you want to access these charts, the website's altercrypto.com. Link will be pinned in the first comment description. And if you use my BitGet affiliate link, that will be pinned in the first comment description as well. Guys, that's it. Trade safe, trade smart, and be ready for the crash.